All right, ladies and gentlemen, so let's talk about some shorting today. As I mentioned earlier, a lot of us like to trade on the long side with bull traders, right? But someday, the better opportunities presented to us on the short side. So we should learn how to do shorting. At least try it out, practice if you have not done it, know it, but not haven't tried it yet. You know how to do, but you didn't want to do it yet. It would get started on the paper money and try it out. A lot of the platform would give you paper money simulators. You can try make it try it to see how it go. As you get used to it, and then you can start using the real money after you do have a consistent profit trades on it. Okay, so in the meantime, we get a little trace on the YELL here, YELL. Trying the third time here, see we can get 15 cents out of it. YELL. Should I have this set up for sale ready if I want to scale out? Okay. Okay. So as we speak here, YELL is going. So keep an eye on this thing to scale out along the way. I got my things put up so I can do hot key on and sell a little bit here. There we go. Just scale out here at the 50 cents. Now we can move stop to below 325 now. Okay, so we're moving up a little bit as we go. Okay, so this is where the stop is at, right below that blue line. We're gonna go for another 15 cents, be 65, 85, and $1. $4 a minute. Okay, for those who's just like brand new to shorten, for example, like this one right here. So we buy low and we want to sell higher, right? That's a long trade. And the opposite side of it will be shorten. So we think this one is going to be triple tops here at 335, for example, and we want to short it. So instead of buying at 335, we shorten. So we borrow the share from the broker because we don't have it. The broker have the share. So it depends on the broker. Some of them carry the stock. First, the stock shortable or not. If it's just shortable, then second question would be, do my brokers have them? And what status are they hard to borrow, easy to borrow, or easy to borrow? Okay, so either the three things: either easy to borrow, hard to borrow, or short sale restriction. So you have an SSR. Okay, so you have an SSR, stand for short sale restriction. Okay, and then you have an STB, with a hard to borrow. and then you have ETB, be easy to borrow. Now, not all the brokers have those shares. So one broker may be HTB, the other broker might be ETB. Okay, so it depends on the broker. Some carry more stocks, some don't. You know, they have to look at it just-in-time inventory. You know, they have their hand to clearing house, and they just want to use it when they wanted to, when they needed to. Go to like Citadel, one of them, and, you know, NASDAQ's one. So some of them have easy to borrow, some are hard to borrow, depends on the brokers. Okay. But when the stock is short sale restriction, then it's it's restricted or not shortable, then then they will let you know. And then most of the brokers, I guess, all of them would have that same thing, except for one broker out there that sometimes they have some reason they have a lot of shares of some of the stocks that the other brokers don't have. Centerpoint Securities, okay. You have to have $50,000 minimum to open an account there, I believe. Used to be that way. I don't know now how much. Maybe 30,000. I heard them going down, but yeah. So Centerpoint Security usually have many shares available. Okay. So for example, let's say we found out your broker should tell its stocks, let's say this is borrow, shortable, and it's that you can borrow the share. So instead of buying right here at the 335 and banking on the way it going up so that I can buy here and sell higher, that's a long trade. Everybody knows to do that, right? Now we want to short it. We think, okay, this is triple top here. This thing probably gonna go down, right? So we want to short it. Then we want to borrow it, assuming it's easy to borrow. And so we click on the short sales. So short sale and the broker is available. They have available share. They allow us to borrow. So now let's say we sell 100 shares of Yale. Now we borrow from the broker 100 share. When we borrow something, you have to return it, right? So now you sell it for 100 shares at $3, so you spend your credit for $335 because you borrow 100 shares and that share is $3.35. So now you got a credit for $335 for 100 shares that you borrow from your broker. Okay, so now in order for you you already got the credit, so you already showed the share. You already sold for $350. Now, if you want to make a profit, you have to buy at the lower price. Okay, so now you think that now the stocks started coming back here, guys. So make sure you move your stop loss up. I move my stop loss up right here. So if the stock go down to $3, now you make $3.35 from the sale. Now you buy back, you buy to cover. So we buy to cover, okay? Buy to cover. So we buy back 100 shares from our broker and to return the share back to our broker. So we buy it at the open market, return to the broker 100 shares for $300. Now you pay $300 for 100 shares of Yale at $3 per share. So we spend $300 to buy at the open market for 100 shares of Yale, return it back to our broker. The cost to us is $300 because we buy it back at $3 a share. But we sold it for $335, right, earlier. So now we park at $35. Okay? So we keep that difference. So we only spend $300 to buy 100 shares, but we got a credit at $335. Now we got to keep that $35. So when we short it, we want the stock to go down so that we can buy it back at the lower price and return the share back to the broker at the lower price, so we can keep the difference. Okay, so that is the concept basically the whole thing of selling shorts, right? Because you don't own the stock, a lot of time they call it naked short, right? Naked means you don't have anything to, you don't have that, you don't own the stock or in any other place, you don't own, um, you know, in your portfolio, you don't own any other, you don't have any share of the stock, you short it, you cannot return it unless you have to buy it back and to return it. They call it naked short, so you don't have it. But which means, you know, the risk on it, I have to bring it up, the risk now. When you buy a stock, the worst scenario is that, let's say I buy at $330, $3.50. The worst scenario is tomorrow, this and by the next few minutes, Yale announced that they go bankrupt. All right. So say Yale just like in the next 5 minutes say I go bankrupt. So the stock go down to zero. So the worst scenarios I would risk is $300, $335 because I bought it $335, right, for 100 shares. But on the short side, theoretically, the stock can go up forever. This thing can go to $7, right? That you just lose 100%. Now you have to pay back buyback at $7 a share. Now you just lose 100%. But if the stock go up to $10.35, you just lose 200%, and so on. So technically, it can go up forever. Right? That's the risk if you keep holding it and if you don't buy it back to cover. That's why every trade we are in, we have a stop loss on it, and the exits, strategy, price target and stop loss. Right? So if the stock we short here at 335 and it doesn't go down, but it keep going up, make sure we have stop loss. Let's say we stop loss at 350. If you go over 350, you buy it back to cover, you're out. You lose 15 cents a share. Okay. Then you return the stock to your broker. That's it. I'm done. Take a loss. Okay. If stock go against you, but if you hold it, and you don't want to buy back, and you think that the stock gonna go down, and then it keep going up and never go down, then you're holding the bag, just like you're buying the stock for a long side and you hold it and it keep going down and you're holding the bag. Okay. It's not a Gucci pair bag, but it's a plastic bag with all the junk in there, right? So make sure we understand that a shorting is very risky if you're going against yourself. You keep convince yourself that the stock gonna come down, if it keep going up, and you convince yourself as one day the thing gonna go down. Okay, it can go up forever. Okay, so make sure you understand it, but it's very profitable. Let's take a look at this. Okay, while we're keeping in track of this, I have this on my other steer. I'm gonna keep track of it. I have a few shares in it. Okay. It's Mr. Z. What is your asking here about MSGM? Pretty low flow there. MSGM that was. Oh, come on. We are power hour starting right now, folks. Look like we're still holding up on this one, on FNGM at this point in time. $770 will be the stop if it doesn't hold below the 770 here, right there. 765 maybe. Okay, so what we do here, we see this one gone up, consolidated, bull flag, pop, making out a bull flag here, pop, and now it's getting, every time it pop here, getting shorter and shorter. Now we turn it down to retest this wedge here, forming a wedge here. So either gonna break a crack here coming down, but we don't know how much it's gonna go here. And you know, it's been up for quite a bit today, over 100%. Okay, so according to the history, it went pretty big. You know, it's just a former runner. You're looking over here, former runner back in February. It went from, oof, wow, yeah, $4 or something, all the way up to 50. So it's 1,000% in 2 days. There's a former runner, so who knows? This thing can jet it up again. Does it need to get over this $8.15 or so? Okay, so it get back over 825 or below the 760, pop a crack there. Okay, so let's take a look at this one real quick here on the short side of it, so that we can close this top, so we can get back into trading. All right, see, we have a bull flag here, and I continue to go on yield. And now we are in the power hour, so we can have a power hour run or not. NCLH, for example, this morning. Okay, one pretty profitable strategy that we use on a short is the gap and go strategy. Okay, it's a gap and go strategy. So look at this one. It gapped down, and it's open right here, right around $19.70. Okay, but look at in the pre-market support here. That's what we look for, about 1965, 1960, and then the pre-market resistance. There's a couple of resistance here, right at about $20, and then the other one is more like this, more like a bear flag, a descending triangle. Okay, so another level up would be up here in this area, about $20.25. Okay, so if the market open and it stay above this level and continue to run up here and continue to go this way, then we have the reversal from this drop. Okay, but we measure from here to here. This is the gap and go. The market open, just stay there for a few minutes, come back down, crack below this level. Okay, and we have a gap and go to the downside. This is where the entry is, below the $19.50. Okay, 1965, 1950s in this area right there. Okay, and then keep continuing to go down till it went down to 1850. So you get a dollar move to the downside there after this gap and go. But the idea is this is one of the best strategies on to do a short in the morning when it's have a gap down. Okay, you got a gap and go here. Now we have another example of ZI, right? Some information. This is the perfect scenario right here. You see that a descending triangle with the pre-market support here, right around $20.25. Okay, and a descending here top here. Got to this area, couldn't break through. This is where the first entry would be if you go to the upside, right? And for continuation, it need to break through this level. Okay, but you got this. You see it stay below this descending top line here. Okay, let's say you didn't see this. Okay, let's say you didn't see this. I'm gonna cover this. Okay, you can still draw the line. Okay, you can still draw the line here. Okay, this is that's why I say a perfect scenario here. You can draw the line. Okay, this is the line right there and the line right there. Okay, and then this descending top line right there. Okay, And I keep watching when the market opens. You don't have to jump in right away. Just watch it for a few minutes to see which direction to go. It come down and crack this level. This is the 5 minutes, but you put in 2 minutes, you probably can see it that you can able to enter the stock. Okay. Right there. Okay. All right, coming down hard here. Okay. So that another gap and go, and kaboom, coming down and keep continue to go down. You keep continue to draw the line where the next line would be. This is my first cover there. Next line down here about $18, and then $18.50 and $18. Okay. So the gap and go there. There's another one on a PayPal. Okay. Gap down here. This is the pre-market support, guys. And that level, pre-market resistance, or it doesn't need to be having, you don't have to have a license, artist license to draw these lines. Okay. So I'll see right here coming down, kaboom it here. It's crack the range and just keep going down. Okay. So we got the this is one of them, those strategies that are very profitable, and if you don't know how, you should learn how to short it. So you don't leave the money on the table, and you don't sit there and whining and grinding and wishing and hoping that the stock will go, or the market could give you the bull, because the market is not, it's not riding on the bull back at the back of the bull every day, guys, right? As you know, some days you got better set up on the short side, and if you don't chase short, you miss 50% of the money that you're gonna make. Okay. And I see that the thing with this, with, not just this room at the Turbo Tradings, but everywhere I go, I see people are just trading the bull all the time. Not many people trading short. You got to know how to trade short and learn how to do it and practice it and put into use. Okay. Because the bull not running every day. You need to relax and take a break sometimes so the bear can take his turn. Like last year, the bear was in control. We traded the bear the whole year. The bull here and there, but we trade whatever the market give us. Okay. So Yale is going right now, folks. Yale is going. Yale is going. All right, we want to scale out there, guys. Come on, why are you doing this all the time? You're too slow. My fingers are faster than the keyboards. That's surprising. Time to have a new keyboard. All right, 385 there, guys. Oof. Starting very white music now. There we go, 385 and $4. Just take some profit here, guys. 380s level here, 385 level here. Okay. Faster than I could take profit there, which is a good thing. Any questions? Feel free to bring it up on the short side. Every day, guys, we need more ears and eyes. If you can help out the room, we would greatly appreciate it. If you see some short setup and you want to trade and you're not sure, bring it up to the room. Don't be shy. Ron, I'm not gonna delete your post if you to give us an alert with the tickers and possible ideas or questions. Okay. If you, let's say you see an HCL and say, okay, an HCL come down, can we short where's the level for shorting it? I guarantee with you, Ron, I'm not going to delete that post. So don't be afraid of the guy. Okay. Sometimes he's on tequila, he's okay, but unless you like flood in the room with all the stuff that's not good and put it on the off topics if you put in the off topic or something not related to put in the off topic. But we need more ears and eyes in the room because I can't see watch everything. And sometimes you can see the scanners going here, but a ton of them just pop and and this lady AI Holly keep telling me yeah, different things. I can keep track of them. So I need help. Please help if you want if you could see something, say something. Guys, any question, please let me know. Happy profit on the short end, guys. And happy profit on Yale today on the long side.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.